Hi everyone, I'm the BTS Trader and this is my favorite shirt. I backtest market data to help you make better trading decisions. Today we're looking at what's the best moving average lengths to use on the 5-minute chart in the SPY. But before we begin, please hit the like and subscribe button.
So we're back here in multi-charts. As usual, I'll show you the instrument settings. So SPY, SPY, 5-minute bars, session template, US stocks regular trading session, approximately 10 years of data using exchange time rather than local time. And then we'll see how I formatted this strategy / they like to call it a signal in multi-charts. So we're going to do no commissions because this is just a test on what are the best moving averages to use on the 5-minute chart. This is not a trading strategy. Fixed shares, 100. And we are going to do this use bar magnifier 1 minute. So for the very first time on the BTS Trader channel, I actually ran a optimization that took well over an hour. I generally don't like to run long optimizations, but in this case, I actually originally ran it with kind of limited ranges, but I realized maybe I was thinking, I guess you could say, too limited because the max moving average length that I used was 200. But I thought to myself, maybe I should go beyond 200. Maybe I'll actually get better results. And I also was using the minimum moving average was actually 20, but I was like, okay, maybe I'm limiting it too much. Maybe, who knows, maybe a short moving average really works better. From these two, maybe you could tell, I actually tested 2 different moving average lengths for the entry and exit. And because just from experience, I know that using just one simple moving average, like for example, let's say you're using a 20 and just using that for like an entry and exit does not work. I mean, it's not that it doesn't work, but it's not the best choice from what I've experienced. As I always joke around, we always like to see big numbers on this channel. And yeah, so, for this purpose, we're just going to look at the biggest number. We're not going to, even though it's important for a trading strategy, but I'm not teaching you a trading strategy. I'm just showing you moving averages. Usually you would want to look at average trade, the average losing trade, all these other factors, the drawdown and whatnot. But right now we're just kind of looking at what is the best net profit moving average. And right now, from what we can see, is that on entry, using the 40 moving average length and using the 265 for the exit gives us the best net profit with 44% profitable. And so I'll put that into the strategy and we'll look at the performance report next. So we're here looking at the strategy performance summary. Once again, 41,000, no commissions, no slippage, just testing how these moving averages worked kind of theoretically in history. And I'll say it also once again, I try to repeat this and maybe I don't repeat it enough sometimes, that, this is there is a risk of overfitting. And what overfitting means is that we're basically using the best settings for past data. And that goes into the whole idea of past performance is no indication of future performance. And that's what we mean by overfitting. So, fundamentally, at the root of it is that we're just the 40 length and the 265 length is the best for the last 10 years, but it's not necessarily going to be the best for the future 10 years. So it performed, return on account was 415%. So you beat the S&P buy and hold basically by 100%. Max drawdown is 10, let's call that 11,000. We've seen drawdowns on most of the other strategies that we've tested around 12,000. So that's not bad. 1,000 less is better than 1,000 less. And actually this is maybe our best. Actually, we did a test in scalping and that did show that you could actually get 100,000, but you basically need to be a hedge fund institutional investor to do that. Retail traders, we can't do that. But as for a retail trader, this is actually within a certain realm of possibility. But like I said, this really isn't a trading strategy. Performance ratio. I think this might be one of the few times we are above 0.5. So this is 0.64 for our annualized Sharpe ratio. So not bad at all. Okay, as usual, bottom left, top right, fairly smooth, not too bad. Look at the drawdowns. I expect to see that March 2020 as, yep, our max drawdown right there. 1,500 trades over 10 years, so something we could, a trader could actually manage. Here's obviously the bad part. It's only $27 a trade. You usually would want to see something at least $50. I mean, I would say maybe $40 minimum. But like I said, this is not a strategy. This is just testing these moving average length. But, sometimes in my head, I can't help but look at it as a strategy. But that's why I kind of lose track of that sometimes. And you're going to have to excuse me for that. But like I said, we're just testing the moving average length and how they performed. And this might be a first for us. Yeah, no real losing years. That's a break-even year. And I don't know, maybe let's just say that is a winning year. I mean, it's not too far off from like this thousands, though. But okay, we'll say 2 break-even years, but no losing years. So that's really not bad at all. I mean, so pretty good. So yeah, I would say this is these moving average lengths, was it 40 and 265? 40 for the long entry, 265 for the exit. At least from past performance, pretty good. How will it do in the future? Who knows? But why not? Something you could think about using now.
So there you go. You can see that using 2 different moving average lengths is actually better than just using one. To be honest, I'm actually pretty surprised we could get these results on a 5-minute chart. But in reality, it makes sense because in a certain way, we're actually trading on a longer time frame chart, just on the 5-minute chart. So that's it for this video. Please hit that like, subscribe button, and comment down below. I'll see you next time.